Welcome to the Deep Dive. Today we're kicking things off with a really close look at the latest financials from one of the biggest names in tech. We're not just going to read out numbers, though. We want to figure out what these results actually tell us about their strategy, where they're winning, and what the road ahead might look like.
Right. So our mission today is pretty straightforward. We've pulled together info from all over the Wall Street Journal, Barron's, specialist places like A-Invest and Stock Titan, even tech sites like The Verge. We're going to sift through it all and give you the key takeaways on Microsoft's Q4 FY 2025 earnings. Help you get a quick handle on what went down, why it's important, and maybe what to watch next. And there's some interesting stuff in here. They beat estimates pretty handily. Cloud growth is just booming, and they're pouring tons of money into the future.
We'll definitely touch on the AI angle and, the competition too. So let's just dive in. What were those big headline numbers that got everyone talking? How did they look compared to, say, Wall Street's guesses?
Yeah, the top line figures were definitely strong, no question. Microsoft pulled in $76.44 billion in revenue for the quarter.
$76 billion, okay.
And that's up 18% from last year. It also smashed the analyst forecast. They were thinking more like $73.9 billion. So not just a little beat, a significant one. Shows real demand.
Okay, revenue's up strongly. What about the bottom line? How profitable were they?
That looked good, too. The diluted earnings per share EPS landed at $3.65. That's a 24% jump year over year.
Wow, 24%.
Yeah, and again, way ahead of the $3.37. $3.38 analysts were predicting. Net income was also up 24%, hit $27.23 billion.
So these aren't just good numbers, they're better than expected numbers.
Yeah.
What does that signal, really, beyond just healthy company?
Well, it shows they're not just growing, they're growing faster than the market thought they would. It suggests they're managing costs well, probably have some pricing power, and are just executing really effectively.
Right, capturing share, maybe?
Exactly. It gives them, a stronger footing, more confidence from investors, more strategic flexibility for whatever they want to do next. It's a powerful position to be in.
Makes sense. And speaking of powerful positions, everyone always points to their cloud business, Azure especially. That seems to be the engine room. What did the numbers show there?
Oh, absolutely. Azure was kind of the star of the show, you could say. Revenue growth there was a remarkable 39%.
39%.
Yep. And the consensus estimate was more like 34, maybe 35%. So again, really blowing past expectations. That suggests demand for cloud infrastructure and services is just incredibly strong, maybe even accelerating.
And how does Azure fit into the sort of bigger Microsoft Cloud picture?
Right. So Microsoft Cloud, which includes Azure plus other cloud services, brought in $46.7 billion. That itself was up 27% year over year. Huge number.
$46 billion from cloud alone.
And they even revealed Azure's annual revenue for the whole fiscal year, $75 billion. That's up 34% for the full year. It just underscores how absolutely central cloud is to their whole business now. It's the main growth driver, plain and simple.
Yeah, you can't argue with those kinds of figures. It's clearly critical. But Microsoft isn't just Azure, right? How did the rest of the business look? What about overall profitability?
That's a great point. They're definitely not a one-trick pony. Their operating income hit $34.3 billion, which is up 23%. And that translates to an operating margin of around 46%.
46% margin. That sounds quite high.
It is. It's very efficient. It basically means for every dollar they bring in, nearly half is left after covering the core costs of running the business. It speaks to, economies of scale, good cost control, maybe strong pricing on their software and cloud products. Very healthy.
And this strength wasn't just in cloud.
No, it was pretty broad-based. If you look at their segments, productivity and business processes, think Microsoft 365, Office, that kind of thing. That brought in $33.1 billion, up 16%.
Still growing strongly.
Definitely. Then Intelligent Cloud, which is Azure, but also server products, that was up 26% to $29.9 billion.
Okay.
And even the more personal computing segment, that's Windows, Surface devices, Xbox, search ads, that grew 9% overall to $13.5 billion. Within that, Xbox and advertising get even better, up like 13 to 21%.
So it really is across the board then. They're firing on, most cylinders anyway.
Exactly. It shows the diversity of their business. Strong demand isn't just limited to one area. It points to a really robust model overall.
Okay, so things look good now, but they're clearly investing heavily for the future. Let's talk about CapEx, capital expenditures. The numbers look huge.
They are. CapEx in Q4 was $24.2 billion. That's a 27% increase just in spending on things like data centers, servers, physical infrastructure.
$24 billion in one quarter. Wow.
And get this, They raised their forecast for the next fiscal year, FY25, to $85 billion in CapEx.
$85 billion. Why so much? What's that telling us?
Well, it directly ties back to that cloud growth, especially Azure, and their big push into AI. You need massive infrastructure to support all that computation and data storage.
Right, you can't run AI without the hardware.
Precisely. So they're betting that demand is going to keep surging, and they need to build out the capacity now to meet it. It highlights what analysts call increasing capital intensity, basically. It costs a lot of money up front to keep this kind of tech growth going.
That's a massive bet on future demand. But even with spending that much, are they still generating good cash flow?
Oh, absolutely. That's the other side of the coin. Their operating cash flow was $42.6 billion, up 15%.
Yeah.
And free cash flow, which is basically the cash left over after paying for operations and those big CapEx investments, was $25.6 billion, up 10%.
So still generating over $25 billion in truly free cash in the quarter.
Exactly. Which is incredibly strong. It shows they can easily fund these huge investments and still have plenty left over. And they used some of that, returning $9.4 billion to shareholders through dividends and buybacks in Q4.
Right. So they can invest heavily and keep shareholders happy. That's a good place to be.
It's a very strong financial position, yes.
Okay, so strong numbers, beating estimates, huge investments, good cash flow. How did the market take all this news? You mentioned the stock jumped.
It did. Right after the earnings came out, the stock popped about 6 or 7% in after-hours trading. A pretty clear positive reaction.
And what are the analysts saying now, looking ahead?
Generally positive. Most expect that profit margin expansion to continue, and they're really focused on how Microsoft will, make money from all this AI investment, the monetization piece.
But are there any concerns, any clouds on the horizon, so to speak?
Well, yes. Some analysts are pointing to that capital intensity we talked about. The need for massive ongoing spending is a risk. If growth slows, that spending could really start to weigh on free cash flow.
Okay, the cost of growth.
Right. And there's always competition. People are watching things like the partnership between OpenAI and Google, how dynamics like that might shift the landscape.
Interesting point. So despite those notes of caution, what's the general feeling from brokers?
Yeah.
Still positive.
Yeah, the consensus rating seems to still be a buy. The average price target was around $580, which, from where the stock was trading around $512 when the reports came out, suggested maybe like 13% potential upside.
Got it. So general optimism, but with an eye on the spending and competition.
That sums it up pretty well. Enthusiasm for the current performance, but awareness of the challenges ahead.
Okay, let's shift focus a bit to that strategy, especially AI. Microsoft is obviously betting big here. We're seeing Copilot adoption ramp up.
Oh, yeah, big time. The numbers are pretty striking. For Microsoft 365, Copilot usage apparently went from about 17% of endpoints, customer devices, basically, towards 31% projected within 12 months. That's fast uptake.
Almost doubling in a year.
And GitHub Copilot for developers, usage there is reportedly up 4 times compared to the previous year.
4 times. Wow. So what does this rapid adoption really signify?
It shows their AI strategy is resonating. Customers are actually using these tools, integrating them into how they work. That's huge validation for the billions they're investing. It's a key part of their future growth story.
But it also brings complexities, right? Like their relationship with OpenAI?
Exactly. That partnership is crucial for a lot of their AI features. But there are ongoing negotiations, talks about revenue sharing, maybe changes in how autonomous OpenAI remains. Any shifts there could potentially impact Microsoft's margins or control. It's something to watch.
Okay, so the AI opportunity is massive, but it comes with partnership dependencies.
And it all loops back again to that capital intensity issue.
Not spending.
Yeah.
Yeah.
Powering all this AI, expanding Azure, it needs that constant heavy CapEx. If demand cools off even a little, or if competition forces prices down, that massive spending commitment could start to squeeze their free cash flow harder than expected.
So it's a balancing act. Huge potential, but also significant financial commitments and risks to manage.
That's the core challenge. The AI future looks incredibly promising for them, and they're executing well now, but sustaining it requires careful navigation of spending, partnerships, and the competitive environment.
Okay, so let's try and wrap this up. Summing up our deep dive on Microsoft's Q4 FY 2025. It sounds like, well, a really strong quarter across the board.
Definitely. Strong financials, beat expectations pretty much everywhere.
Fueled significantly by that incredible growth in the cloud, especially Azure.
Right. And underpinned by massive strategic investments, particularly in AI infrastructure.
Which all led to, pretty positive reaction from the market and analysts. despite some emerging concerns.
Exactly. And maybe that leaves us with a final thought for you, the listener. Microsoft's results clearly show impressive growth, really strong execution, especially in cloud and AI. But that rapidly increase in capital expenditure, the sheer amount they have to spend to keep growing, plus the evolving relationships with key partners like OpenAI and, of course, ever-present competition, it does raise a big question. Just how sustainable is this pace of growth? And what kinds of maybe unexpected challenges could this really high level of capital spending introduce down the road, especially for their free cash flow and their overall strategic flexibility? Something to think about.